A very good morning, everyone. It is extremely a pleasure to invite you all to a very, very interesting and important topic at this version of Zen Tax Talks. So we will get the session started in another couple of minutes, please. Thank you for your patience. Hi, everyone. A very good morning to each one of you. It is extremely a pleasure to invite you all to this 92nd session of Zen Tax Talks. And we have something exciting for each one of you to tell us, right? So, Zen Tax Clinic portal, we are going for a complete revamp and the countdown has already started. We will have the new version, a very, very modern, upgraded, fully functioning Zen Tax Clinic portal to manage all your GST notices in the most easiest manner, which would be made available to each one of you from Monday, that is the 7th of October 2025, from morning 9:30 a.m. So this is going to be one of the most groundbreaking development from Zen Tax Clinic. We are very heartfully thankful to each one of you for the feedback that we have received for version 2.0 of the portal. Now with this version 3.0 of the portal, we will have a very fully functioning portal, continues to be fully free. You would be able to manage all your intimations, notices, orders, all from Zen Tax Clinic portal easily. You can manage multiple GST numbers and get the notices fetched within a very quickest time. The speed of the portal has got phenomenally increased. The user interface has been having a complete revamp. You can click the notices and view it very seamlessly. The timeline for the notices is very, very great. And as always, the actionable insights on what are the notices for which action to be taken, action has been taken, and no action is required. All these insights are coming very beautifully to you. Please watch out for the new development of ZenTax 3.0 on Monday. Do get back to us with your feedback, because your feedback is what really drives this portal. So your feedback on ZenTax talks, your feedbacks on ZenTax portal has been the constant motivation for us to keep on developing things. So come back to us with whatever feedback, small or big, and we are here to make it better for you. So now moving forward to this session of ZenTax talks, on the 92nd session, we have a very interesting and very important topic, a topic which is relevant for this current month of October. So now that in the month of October, generally we have the due date for filing income tax return. We have the due date for filing AOC 4 under the Ministry of Corporate Affairs, that is relevant to or related to the Registrar of Companies, particularly applicable to all companies. But considering that the due date for non-tax audit cases, which was due on the 31st of July, has been extended to, or was extended to, the 15th of September, considering that we had a very short timeline, and furthermore, the glitches in the income tax portal, the due date for tax audit, that is the filing of Form 3CA or 3CB along with Form 3CD, which was due on the 30th of September, has now been extended to the 31st of October. And I am sure most professionals are now fully engaged in the preparation of tax audit report, as well as along with it, the preparation of the income tax return there too. So in relation to this, we really thought that it is a very fit time and a very important time that we talk about the tax audit report applicability and some of the key clauses relating to the tax audit report, some of the interrelation between the income tax as well as the GST matters, so that we ensure that the tax audit report is correctly filled, so that there are not any other consequences at a later point in time. What could be the consequences because of Form 3CD or something in Form 3CA or 3CB? Does it have any consequence at all? Yes, it is without doubt that professionals will know it very clearly that if the Form 3CD is not filled properly, there could be a consequence that there is a penalty that is being imposed. There is a scrutiny that is being taken up for in relation to the income tax proceedings, or there are instances where there is a search which is initiated. Search is nothing but a raid. A search which is initiated, a search or a survey which is initiated under the income tax proceedings because of some erroneous filling in the tax audit report in Form 3CD. Not just under income tax, even with respect to the GST matters, there have been various instances where GST notices are issued prima facie based on the details that are filled in Form 3CD. Not just with respect to GST notices, even a search or an inspection under the GST is carried out predominantly based on the details that are filled in Form 3CD. So correct filling of details in Form 3CD is of utmost importance, and in this regard, we have with us CA Balakrishnan, who will take us through this very important topic on how to fill each of these very important clauses in Form 3CD. So is there any direct correlation between each of these clauses? Members would definitely know that there is already a signed MOU between the income tax and the GST department for seamless sharing of information. Now that in the pre-GST regime, there was no linking of PAN number with your VAT TIN number unless and otherwise in exceptional situations. Only in some of the states that VAT number and your PAN number were interlinked. Now, all of us very well know that your GST number very well has a PAN number right in between. Your GST number is a 15-digit number And in that 15-digit number, first 2 digits represent the state. The next 10 digits are nothing but your PAN number. Then is the number of registrations that you have. Then is Z, and one is the check digit. So you have the 15 digits of your GST number, and PAN number is right there sitting in the middle of your GST number. Not just that, the department has to have an algorithm to find out what are the GST numbers linked to the same PAN number, but the tax audit report very specifically seeks that information of your indirect tax registration numbers for each of the PAN number, because tax audit report is for one PAN, one tax audit report in Form 3CD along with Form 3CA or 3CB. This Form 3CD very well captures that information of your GST registration number. Therefore, it is of utmost importance that when turnover is reported in Form 3CD, that turnover is reconciled along with the turnover as per your GST returns and along with your VAT returns if at all it is being filed. So today in the GST implementation, in the GST implemented era, and that too moving forward from GST 1.0 to GST 2.0, where we have the completely new rates of taxes, is there still any taxpayer who's still filing the VAT return, or are there any taxpayers who are required to file their VAT return? Let's take the situation of a petrol bunk or a person who is dealing in liquor. These are some products for which it still continues to be under the VAT regime, and therefore even those VAT return needs to be verified as part of the tax audit process. So it is not just about the turnover matching alone, but there are also various other clauses. When Balakrishnan explains to you today, you would be able to understand that the method of accounting that is being captured is extremely very important, number one. Number two, even more than the method of accounting, the nature of business which is handled by the taxpayer, which is being entered into in Form 3CD, has to correctly capture all the relevant businesses of the taxpayer. In various situations wherein we have got a GST inspection or a GST search case and the officer is relying upon the Form 3CD, we note that in Form 3CD, only one of the relevant line of business, only one of the predominant line of business has been entered into Form 3CD, and all the other relevant lines of business have been grossly ignored. Let me take a very simple scenario. A person who is running a restaurant, who is also engaged into the supply of accommodation services, will have a scenario where input tax credit is not eligible in respect of the restaurant business. Input tax credit is eligible in respect of accommodation services. In such services, if at all the business nature is entered only as nature of restaurant, then the GST authorities come back to say, you are running only a restaurant, then how come you have taken the benefit of input tax credit? We justify to say, sir, in my GSTR1 returns, I have duly disclosed tax payable at the rate of 12% or at the rate of 18%, which would not have been applicable in respect of my restaurant services at all. Therefore, I have taken the benefit of input tax credit. But that is your voluntary disclosure by the taxpayer. The officer says this is given by a chartered accountant. The chartered accountant has certified in Form 3CD that you are carrying only and only restaurant business. How can I really take into account that you are also running an accommodation business at all? Then we will have to convince the officer, sir, come and see, my restaurant is there on the ground floor and all the other 3 floors are all my accommodation services. Then only then the officer is able to satisfy himself that there has been a really an accommodation service which has been provided by the taxpayer. Therefore, entering into all these basic fields are also extremely very important, crucial, and not just the fields where there are values filled. Many people think, sir, only when I am filling a value, turnover value, yes sir, turnover value I filled as per my P&L account. Only my turnover value is relevant, not my other values. But these values, these details which are entered, which are not quantitative in nature, these descriptive records which you are actually providing are extremely also very important when it comes to both income tax and GST matters. Therefore, whether it is relating to the method of accounting, whether it is relating to the nature of business, whether it is relating to the number of registrations and indirect taxes that you have, whether it is relating to whether or not the transactions of indirect taxes have been routed through the P&L account, or it is with respect to the most important clause and clause 44 of the Form 3CD. Clause 44, as members would definitely be well aware, talks about segregation of my total expenses into how much of it is relating to GST registered entities, how much of it is from relating to exempted transactions, how much of it is relating to non-GST transactions. So these all these things are extremely very important, and therefore this session would take all of us through this very important topic to decipher the nuances of various clauses of Form 3CD. So over to Balakrishnan for taking us through part 1 of this session. The first few important clauses would be handled in this part 1 of the session. We will also have a question and answer session. Whatever are your clarifications, we will collectively discuss together and get it sorted. If there are any questions, we will also take it up in part 2 of the session. In part 2, we will immediately in the forthcoming session, we will discuss with other important clauses and take us on a very deep dive relating to all these important aspects of tax audit. Over to you, Balakrishnan.
Very good morning, everyone. In this part of webinar, we will going to discuss about what is tax audit report and when it is applicable to the assessee and what are the reporting requirements that are covered in Form 3CD. Let's get into the topic. First, what is tax? First, what is audit? Audit means in general terms, independent examination of records. What is tax audit? Tax audit is conducted to ensure that taxpayers' financial records and statements to comply with the Income Tax Act. This will help the assessing officer to cross-check the details provided by the assessee. That is, income tax return is filed by the assessee and tax audit report filed by the chartered accountant. So in general terms, both forms will be filed by chartered accountants only. So they must know that correlation between the ITR form as well as tax audit report. And in how will file tax audit report? This will be filed in electronic mode only. The section covered under Income Tax Act is Section 44AB. This section covers tax audit applicability, and various forms includes Form 3CA or 3CB along with 3CD need to be filed. For the financial year 24-25, due date is 31st October 2025, which is extended by notification circular number 14/2025. This is a tax audit report. Tax audit report is applicable for the profession if their gross receipts exceeds rupees 50 lakhs. In case of business, there are two segregations. Generally, if business turnover or gross receipts, as the case may be, exceeds 1 crore, tax audit is applicable. In some cases, if tax audit limit is 10 crore, if cash receipts are up to 5% of total receipts and cash payments are up to 5% of total payments during the previous year. If this is within the, which means 95% of the cash receipts and payments must be received in bank electronic credits mode only. If more than 95% has been received, then tax audit limit is enhanced to 10 crore. So up to 10 crore, there is no tax audit. In some special cases, tax audit under Section 44AB will be triggered. We will see what are the following sections that will trigger Section 44AB, that is tax audit. Tax audit is required to if assessee opts declare income lower than the deemed income as per section 44 AD or ADA or AE. If these all are called as presumptive taxation sections, if assessee is offering lower than income prescribed under these sections, then tax audit is mandatory. And we need to, in the tax audit report, we need to select under which class tax audit is conducted. First class is 44 ABA, that is cash receipts and cash payments does not exceed the specified percentage of total transaction. That is 95% of the receipts and payments should be received in bank account, but the turnover exceeds the specified limit, which means turnover exceeds 10 crore. At the same time, 95% of the cash receipts, 95% of the receipts and payments are in electronic modes only. Then we need to select class 44 ABA. And so another class is 44 in 44 ABA only. There is another class, that is total sales or turnover gross receipts in business exceeding specified limits. That is the limit specified under section 44 AB, that is rupees 1 crore. If our cash receipts or payments is more than 5%, then our tax audit limit would be 1 crore. So we need to select this class. And 44 ABB is for profession, which means profession who is having gross receipts more than 50 lakh subjected to tax audit. They need to select 44 AB, B class. And 44 ABC. This is for deemed profit under section 44 AE, which means we are offering lower than income prescribed under section 44 AE. Then we need to mandatorily get our books of accounts audited by a chartered accountant under 44 ABC. And 44 ABD is for profit or gains lower than deemed profit under section 44 ADA. ADA is for 44 ADA is for professions who is having gross receipts up to 50 lakh. This has been enhanced to 75 lakh. This will be covered in following slides. And 44 ABE would be applicable if person assessee is offering lower than income prescribed under section 44 AD. That is presumptive taxation for business assessees. Third provision to section 44 AB is applicable if assessee is required to get audit his books of accounts under any other law. Then he need chartered accountant need to select third provision to section 44 AB. And as I discussed earlier, 44 AD when it is 44 AB is applicable for 44 AD, which means presumptive taxation. Even though we are assessee is offering under presumptive taxation, in some cases 44 AB will be, that is tax audit would be applicable. What are the cases? First, we need to who are the eligible assessees for under section 44 AD, that is presumptive taxation. Eligible assessees are resident individuals, HUFs, and partnership firms. That partnership firms excluding limited liability partnerships. And assessee's turnover must be should not be exceeded 2 crore, but it has been enhanced to 3 crore rupees if that cash receipt does not exceed 5% of turnover. Here it is mentioned only receipts, but for the purpose of section 44 AB, they have mentioned that receipts and payments. So for checking applicability of 44 AD, we need to check only receipts alone. And then minimum percentage should be offered is 8% of total turnover or gross receipts in case of other than ECS mode, electronic clearing system mode. In case of cash mode or other than ECS mode. And 6% of gross receipts need to be offered as income if assessee has received only through ECS mode. If here this is only minimum percentage, assessee need to estimate their total income and personal expenses spending expenses ratio to ascertain the exact income as per 44 AD. if assessee is offering lower than this income, then assessee is subjected to audit under section 44AB. Class E and section 44ADA. 44ADA class ABD is applicable for assessees who are offering lower than profits as prescribed in the 44ADA, that is 50% of gross receipts. If assessee is offering lower than 50% of gross receipts, then assessee needs to subject it to audit. Total applicability of 44ADA is total receipt should not exceed 50 lakh. This limit has been raised to 75 lakh if cash receipts does not exceed 5% of gross receipts. Here 44 in 44ADA only they have raised to 75 lakh rupees. In tax audit limit applicability, they don't have raised limit for professionals. That is, this professional means 44AA specified professionals. That specified professionals are lawyers, chartered accountants, film artists, like that. The profession list has been specified in the under section 44AA. Presumptive taxation under section 44AE, which refers to any person who is engaged in the business of flying, hiring, or leasing of goods carriages, who does not own more than 10 vehicles at any time during the year. If assessee owns more than 10 vehicles at any time during the previous year, then he cannot opt 44AE section. If assessee is opting for 44AE section and wishes to offer lower than income as prescribed in under section 44AE, first we need to know what is income prescribed under section 44AE. First, for heavy goods vehicle, if heavy goods vehicle means gross vehicle weight is more than 12,000 kg, which means 12 tons. Gross vehicle weight is more than 12 tons. Then they need to offer rupees 1,000 per ton of gross vehicle weight for each month or part of the month thereof. Say for example, if we purchase the lorry which is more than 12 tons and purchased at the end of the month, say for example 31st of March we have purchased, then we need to offer 1,000 per ton gross vehicle weight for entire month. This is not proportionately calculated. And for other goods vehicles, presumptive taxation would be 7,500 per month or part of month. Assessee actually wants to offer lower than income prescribed under section 44AE, then they need to get audit his books of accounts under section 44ABEC. And 44AE section alone, assessee can claim partners remuneration in case of partnership. And 44ADA cannot claim partners remuneration. And we will get to know what is Form 3CA and what is Form 3CB. When need to select Form 3CA and when need to select Form 3CB. 3CD is mandatory while filling up with Form 3CA or 3CB as the case may be. 3CA is applicable when assessee books are already subjected to audit under any other law. Say for example, Companies Act or LLP Act. If they are audited under Companies Act or LLP Act, they need to select Form 3CA. And tax auditor must reference to statutory auditor and state that particulars of Form 3CD are true and correct, which is just like audit report, and subject to qualifications or observations. In para number 3 of Form 3CA, we need chartered accountant need to give audit opinion which subject to any qualifications in the Form 3CD or observations from the Form 3CD. Any negative or qualified answers must be explained in the report itself. And observations disclaimers must be linked to relevant clause of the Form 3CD. Form 3CD has 44 number of clauses. In that class, we have any observation or qualifications giving in Form 3CA, then that observation or qualification must be referred to Form 3CA class number. And the tax auditor should also mention UDIN is mandatory for every audit conducted by the chartered accountants. So this UDIN at the time of signing of the report they can take, or otherwise at the time of filing of ITR form, UDIN is mandatory. So at the time we need to take the UDIN. Form 3CB. Form 3CB is applicable if assessee is not subjected to audit under any other law, which means if a non-corporate entity who is proprietorship business or partnership business other than LLP, they need to select Form 3CB and 3CD. In Form 3CB, there are total 5 paragraphs. In para number 5, auditor must need to be mention his observation or qualification relevant to Form 3CD. Form 3CB also, UDIN for Form 3CB, 3CD also, generally tax audit report, UDIN is mandatory. So in Form 3CB also, UDIN need to taken at the time of signing of report or at the time of filing of ITR form. Form 3CD. Form 3CD is a detailed statement of particulars of audit annexed with Form 3CA or 3CD. Why it is mandatory? Because AO will it is just a independent verification of computation of assessee's total income. So assessee has computed his total income as per Income Tax Act. Auditor need to be ensured. That's why Form 3CA and 3CD has been introduced. So in the Form 3CD, tax auditor needs to report whether the particulars of total income are true and correct, and the total number of clauses in Form 3CD is 44 clauses. I will cover around 21 clauses by in this session. Remaining will be taken up in the subsequent sessions. What are the key considerations in the Form 3CD? If we are reporting is required under multiple sections, multiple classes, then we need to mention the one class alone, and we need to make it cross-reference in the observations paragraph, which means para number 3 or 5 in the Form 3CA or 3CB as the case may be. In case of disagreement between auditor and assessee, then we need to mention our observations, both viewpoints, which means assessee's viewpoint as well as chartered accountant's viewpoints in the report. This is mandatory in nature. And if assessee provides the details partially or inadequately, and we could not express our opinion, then we need to qualify that clause alone. Say, for example, if assessee is not maintained books for MSME payments, then we need to make qualification in Form 3CA or 3CD in para number 3 or para number 5, as the case may be. And in case of any reliance is placed on earlier court decisions, then we need to mention in our observations or in para number 3 or 5. And name of the and we will discuss about what are the classes that are that have been covered under Form 3CD. First, we will see one by one class. First class in the Form 3CD is name of the assessee. Name of the assessee should be matched with PAN, and trade name need to be reported if name of the assessee is different and trade name is different. Say, for example, if proprietorship is running any business, then trade name may be different or may be same. If trade name is different, then that must be reported in name of the assessee clause. And in case of name change, then name change must be denoted in the auditor's observation, that is para number 3 or 5, as the case may be. And then address registered with the income tax department need to be specified. In case of change of address, we need to give it in the observations or observations paragraph. And verification of indirect tax registration. That is, this is very much important class, because we need to verify assessee's indirect taxes registration. How can we verify? We can search PAN based search in GST portal. so that list of indirect tax registrations, which means that is GST registrations that the assessee have will be listed. We need to give all the registration that has been active under his PAN. So if anything, ensure that all the registration numbers are reported under the verification of indirect class number 4, and if assessee is required to be registered with indirect tax, which is required to be obtained GST registration but not registered, then we need to get written representation as per standards on auditing 580. It will prevent us from the ICA peer review and quality review. And status of assessee is mandatorily need to be mentioned, whether the assessee is individual or partnership firm or HUF or company. That status needs to be mentioned in the class number 5. And previous year, class number 6 and 7 are previous year and assessment year. That is mandatory in nature. We need to report in which period we are books are getting subjected to audit as per section 44 AB. That is, we need to mention in class number 6 and class number 7. Class number 8 is relevant class of section 44 AB under which audit has been conducted. Which means, as I said earlier, class number 44 AB, A or B or C, whichever is applicable to the assessee, or whichever is in which class he is subjected to audit, that class must be specified under class number 8 of Form 3CD. And class number 8A is whether we need to ensure that whether the assessee has opted special tax regimes, that is 115 BAA or BAB, 115 BAC, that is new tax regime for individuals and HUF. If assessee is opted any special tax regime, we need to give that also in Form 3CD in the class number 9, class number 80. Class number 9 is particulars of members or partners. If this is applicable in case of partnership or association of persons. We need to mention all the names of partners and members, including their profit sharing ratio. In case of any profit sharing ratio different, which means changes in the profit sharing ratio, then that also needs to be reported in the class number 9 of Form 3CD. And nature of business, as Aravind sir said earlier, nature of business is very much important class, because GST notices and income tax search or raid or anything is based on this nature of business of the assessee. If AO is computing profit, they can refer to the industry-wise profit margin. So that is why nature of business is very much important while filling class number 3CD. So we need to ensure that assessee's nature of business and report it accordingly in the class number 10 of Form 3CD. And books of accounts and relevant documents. Books of we need to report what are the books of accounts required to be maintained by the assessee under class number 11 of Form 3CD. What are the books of accounts required to be maintained? That will be specified under 44 AA. That is for specified professionals. They have listed specified books of accounts that are required to be maintained. And for other business also, they have mentioned that books of accounts, list of books of accounts needs to be maintained. And class number 12 is presumptive income. That is, if presumptive income details are need to be reported, if such presumptive income is included in the assessee's P&L, which means P&L is subjected to audit, that P&L includes assessee's presumptive income, then such presumptive income need to be reported separately. And observations on that presumptive income. Say for example, if it is assessee is maintaining combined profit and loss account, then auditor needs to ensure that proportionate allocation to the presumptive income and arrive the profit of such presumptive income. We cannot offer generally minimum 8% alone if books are maintained combinedly. If books are maintained separately, then no problem. Prepare P&L only for business subjected to tax audit and offer it as other business, say for other books, we can offer it as separate 44AD income. If not included in P&L account, then we should not report in presumptive income class. And class number 13 is method of accounting and income computation disclosure standards. Method of accounting is only two methods, cash basis or mercantile basis. For companies, they need to maintain only accrual basis of accounting only, as per section 128 of Companies Act. ICDS is applicable when computation of income is not for the ICDS is not for the purpose of maintenance of books of accounts. That ICDS is only for computation of income alone. Insofar, there are total 10 income computation disclosure standards have been issued by the government. And ICDS shall not apply for computation of book profit under section 115 JB, that is minimum alternate tax. And this ICDS will applicable if in case of assessee is subject to show book profit under that is applicable for the partnership firms and individuals. For companies, 115 JB is applicable. And in the class number 14, we need to report valuation of closing stock. Generally, valuation of closing stock would be cost or NRV, whichever is lower. For contribuables alone, we need to value, assessing need to value at cost only. In other cases, for raw material, finished goods, work in progress, these all are need to be valued at cost or NRV basis only. And class number 15 of 3CD is conversion of capital asset into stock in trade. If asset is converted into stock in trade, that is we have used as capital asset and subsequently converted as stock in trade, then that details of description of capital asset, date of acquisition, cost of acquisition, and amount of converted value that need to be shown in the class number 15 of Form 3CD. And class number 16, items of income not credited to P&L. Income details that are not credited to P&L needs to be reported. If reported here, then assessee failed to report it in the form, or else chartered accountants, we are filing the income tax forms, income tax returns. If not, if reported in tax audit report, that is class 16 of Form 3CD, and not reported in the form, then this reported income will be added to the total income of the assessee. So we need to ensure that if not reported in the P&L, make the assessee to report in the P&L. After that, we will note that it has been reported. If reported in the P&L, then there is no need to be reported in the class number 16. And in most of cases, assessee failed to disclose that benefit under section 28(4), that is perquisites, business perquisites, on which TDS is deducted under section 194R. They don't know about this TDS receipts. We need to check Form 26AS for the same, and this need to be reported in the P&L. If this profit is reported under P&L, there is no need to be reported under class 16. And capital receipts, that is receipts of, for example, non-refundable deposits that need to be offered as income, but in some cases, assessee has shown as asset. So receipt of assessee has shown as liability. Then if showed as liability, then it needs to be offered as income. Non-refundable deposits need to be offered as income. And valuation of property. Valuation of property must be for land and building transferred, which is consideration is less than fair market value as prescribed by the state tax authorities. So if valuation fair market value is less than consideration received, then that need to be reported in the class number 17 of Form 3CD. So this is mandatory, because the difference should between value, fair market value and the consideration received need to be reported as income of the assessee. So that's why they are asking for fair market value and consideration received difference. Class number 18 is for particulars of depreciation. We can generally depreciation schedule has been annexed separately, but I have taken it as in short the classification of relevant block of assets, which means whether it has been go with 15% block or 10% block as the case may be, and the nature of asset, whether tangible asset or intangible asset, whether plant and machinery or other office furniture and equipments, that need to be specified. And the date of acquisition and the date on which put to use is mandatory for claiming depreciation as per Income Tax Act, and the applicable rate of depreciation must be denoted, and the additions or deductions dates thereof also needs to be reported in the class number 18 of Form 3CD. And class number 19, which is amount admissible under section 32 AC to 35E, that if assessee has engaged in a specified business or having deductions, then this needs to be filled. And class number 20 is important class, because in the class number 20, it is covered bonus, commission, PF recoveries from the employees, and bonus or commission paid to employees not in view of profit or dividend, and employee contribution towards PF that need to be reported. If employee contribution paid after the due date prescribed in the relevant act, then that amount will be disallowed. That is need to be offered as income of the assessee. So it needs to be specified in the following format as given in the screen: serial number first, and nature of fund, whether ESI or PF, sum received from the employees, which means employee contribution towards PF or ESI, due date for payment. This due date means due date as per relevant act, say ESI or PF act, the actual amount paid, and the actual date of payment to be concerned authorities, which means ESI, PF authorities. What is the actual date needs to be paid, that is need to be reported in the last column. And class number 21 of Form 3CD is amount debited to profit and loss account, being nature of capital or personal or advertisement expenditure, and other natures as listed in the Form 3CD. So if any amount in the nature of capital must be treated as asset of the assessee, or as the case may be, and depreciation can be claimed for that. But if it is debited to the P&L account, then the tax auditor must be mentioned here in the tax audit report. Generally, we will instruct the assessee to correct the that debited P&L nature, that debited amount, so that the books of accounts will be proper. If any capital or personal nature, then this need to be reported in the class number 21 of Form 3CD. And class number 21B is amount inadmissible under section 40A, that is TDS non-deduction. Class 40A, first will be given for payment made to non-resident. If in case any payments made to non-resident without deducting TDS, then it must be reported under this class. If if it is reported here, then in the computation of the assessee, it will disallow 100% of the total amounts paid to the non-resident. In case of residents, it will be disallowed at the rate of 30%. We need to ensure that clear reporting for these classes alone, because in first class alone they have given as non-resident, then only given for residents. If for non-deduction of TDS for residents, we have given as resident, then assessee may face the consequence of 100% disallowance. For 30% disallowance, we need to mandatorily show in class B2 of Form 3CD. So that is class B is as payment made to resident referred to in subclass 1A. That is 40A 1A disallowance need to be reported here. And class number 21, interest, salary or bonus to the partners what are the interest paid to partners and remuneration paid to partners. Camera contact adula. Sorry for the technical error. We will continue the same. Under class number 21 of Form 3CD, we need to report interest, salary, and bonus payable to the partners. We need to report any amount payable to the partners in the nature of interest or remuneration or bonus in the manner as shared in the screen. First, we need to nature of payment made to whether interest or remuneration, as the nature need to be specified. Section 40B or 40BA needs to be given, and the amount debited to profit and loss account, which means total amount paid to the partners, or and amount admissible and amount inadmissible. In case of excess limit paid, then that amount is inadmissible amount that need to be calculated and automatically reported in the column F. And in case of remarks, any need to be audited, that needs to be communicated to the assessing officer, that need to be specified here. What is the limit specified under 40B? From the assessment year 25-26 onwards, on the first 6 lakh of book profit, or in case of loss, 3 lakh or 95% of the book profit, whichever is higher, can be paid as remuneration, partners remuneration. And the balance book profit, 60% can be computed. For the financial year 23-24, the limit is reduced limit. For the financial year 24-25 onwards, limit has been enhanced. And amount in class number 21, the amount inadmissible under section 40A3 needs to be given. If cash payment 40A3 covers cash payments exceeding 10,000, in case of 35,000 for goods carriages are disallowed if not made through banking or electronic modes. Subsequent cash payments exceeding the limit specified as that is 10,000 or 35,000 as the case may be, and already allowed as expenses. Say for example, it is allowed as expenses in the previous year, but amount is not paid, that is liability has been shown in the previous year, and in the subsequent year that liability has been settled. If settled more than 10,000 or 35,000 as the case may be in cash, then such amount also need to be shown as business income. That payment would be even though expenses incurred in the earlier year, but the liability is paid during the current year, then that payment should be shown as income of the assessee in the current year. No disallowance is applied if any payment is falls under Rule 6DD, that is payment to cottage industry. Like that, Rule 6DD have specified set of list. If that payment is covered under Rule 6DD, then no disallowance is attracted. And in the class 21E covers provision for payment of gratuity is not allowable. It is not allowable under section 40A7. Audit chartered accountant needs to be reported in class number 21E of form number 3CD, so that AO will so that it will be get automatically not allowed in the ITR form, or else we can in the computation itself we need to show it as separately to any disallowance has been reported in the tax audit report. And class number 21F, any sum paid to the assessee as an employer not allowable under section 40A9, that is payment made to unrecognized provident fund and unapproved gratuity fund. Then this unapproved gratuity fund expenses need to be disallowed. That need to be shown under class number 21F. And class number 21G covers any liability which is contingent in nature, which means liability debited to the contingent liability expenses, that is debited to the profit and loss account, but it is contingent liability. Then the auditor chartered accountant needs to be mentioned in the class number 21G. This will automatically added to the total income of the assessee. Note should be given. Note should be clearly given in the para number 5 or 3 as the case may be regarding if non-availability of contingent liabilities. And we will discuss penalty for non-compliance and when tax audit report can be revised. Penalty for non-compliance. In case of tax audit report has not been filed, but the ITR has been filed, then penalty would be 0.5% of total sales or turnover or gross receipts, or 1,50,000, whichever is lower, need to be paid as penalty. No, there is no penalty leviable if reasonable cost is established as per section 273. Reasonable cost means in case of resignation of accountant during the year end, or sick of partner who is managing and responsible for preparation of books of accounts. Like that, there are so many reasonable clauses which has ITAT or commissioner level appeals also decided in favor to the assessees. In case of that is covered under reasonable clause, then there is no penalty for filing of tax audit report, but it should be filed thereafter. That is belated can be filed. And revision of tax audit report. Generally, revision of tax audit report should not be allowed, but in following circumstances as listed in the screen, revision would be allowed. What are the revision that are what are the reasons that are warranted for revision? Revision of accounts of company after its adoption annual general meeting, or change of law, some law if retrospective amendment has been introduced, and change in interpretation. Say for example, CBT circulars or judgments of High Court or Supreme Court interpretation has been changed by the auditor, and recalculation of disallowance. Say for example, TDS needs to be deducted if assessee making payments to contractors. If TDS is not deducted, then 30% of disallowance shall be attracted. We can advise assessee to deduct the TDS, unpaid TDS before filing of return. Then that such disallowance will not be attracted. But if we have mentioned in the earlier tax audit report, that is tax audit report is generally filed 1 month before due date of return, then it need to be rectified. It need to be revised if reported earlier. And there is no restriction for number of times revision of tax audit report, but the revision must be done only if meet some technical requirements or amendments in law as listed above. Otherwise, revision would not be possible. And finally, thank you for the attending session. We will take it up as question and answer sessions now. Selvakumar sir has asked if an assessee having more than 10 vehicles, 44AB tax audit is applicable. No, sir. If assessee is having more than 10 vehicles, they can't opt 44AE. 44AB is mandatory if gross receipts exceeds 1 crore or 10 crore, as the case may be. CA Venkarachalapati sir has asked the turnover is below 1.5 crore, cash receipts exceeds 5%, and the profit ratio is 11%. Kindly clarify whether section 44ABA or 44ABE of the Income Tax Act is applicable. Sir, 44ABE is applicable only when we are offering as per section 44AD, which is lower than we are opting for 44AD, but we are offering lower. If you don't opt 44AD, then you need to specify 44ABA only, sir. Thank you for the participation in the meeting. If you have any queries or doubts, please WhatsApp to number as shared in the screen. Thank you.